Today is April 4, 2019. Elon Musk taunted the SEC. He's going to pay the price for that one. Trump wants to nominate former chief executive of Godfather's Pizza to the Federal Reserve. That will make the Jerome Powell circus even worse, causing the Federal Reserve to be less independent than it already is. The market's in a rally right now. It's going to continue to be pushed up. The economy's never had this much stimulus in recent history. Mortgage rates are super low. People are rushing in to buy these homes. These poor saps are buying homes priced at an all-time high in the history of the market, in the history of the world, in the history of the U.S. Sadly, these owners are going to be stuck with these homes making payments for a long, long time. Looking at the market fundamentals, S&P 500 is up slightly, 0.21%, approaching the September peak that we saw when I sold out of the market for the most part. The Federal Reserve interest rate is at 2.5. They stopped raising the rates because they were afraid of toppling the economy. It's getting closer to the end of the world with the 2 and the 10-year spread. Bitcoin, which I consider the greed index, is up slightly at 49.25. The days since the last recession was 3,839 days. On average, it's about 3,187 days. Between recessions, that means we're 652 days overcooked since I would have expected to have a recession. Days since the first 90-day treasury yield curve inversion, it's been 13 days since March 22nd on that scary day. The VIX, which is the fear index, is under 40 right now, which means it's safe. It's around 13.5. The peak that we would expect to see would be around 40. It went as high as 89 in 2008 when the economy crashed in the Great Recession. It also bottomed out about 2 years before that in December 2006 at 9.3. We're hovering at those lows that we saw in the VIX, the fear index, right before the economy crashed in 2008. Just to point out, it can jump as high as 70 points in a month. The 90-day and 10-year spread is at 8 basis points, which is 0.08%. Note it went as low as negative 5 basis points on March 27th. The spread between the 2 and 10-year treasury yield is 0.18%. That's 18 basis points. Today, there was a 13 basis point spread March 22nd. 10-year yield is at 2.526%. The government debt to GDP ratio is at 105.4% of GDP, meaning that the debt that the government has is higher than the annual GDP. For perspective, it was 65% in 2008. Unemployment is at a staggering low of 3.8%. Applications for unemployment is the lowest since 1969 at about 202,000. Foreclosure rates are down nationally at 0.43%. Interesting though, 30% of states did go up. The 30-year fixed mortgage rate is incredibly low at 4.08%. Inflation is low at 1.5%, which is surprising. Basically, with all the changes in motion here, I think the economy is going to have to run its course naturally. The Fed should be ticking up the interest rate, but they're not, essentially creating a doomsday device. I think the market will correct by itself. When that happens, the Federal Reserve is only going to be able to lower the rate 2.5%. That's going to be too little, too late. I expect the S&P to plummet under 2,000, not all the way down to 1,000, but under 2,000. I expect the VIX to spike over 90, and I think we're going to see this in May of 2020.